Ian, thank you so much for joining us. If you could just very quickly just explain the tax implications for Santam this period and how that's hurt overall headline earnings per share.
We paid a special dividend in March, just over 1 billion rands, and that cost in terms of STC about 100 million. At the last budget, there was an announcement on increased capital gains tax, which takes effect from the 1st of January next year. So we made provision in advance of that for capital gains tax at the higher inclusion rate. That cost about 60 million. So that represented a fairly significant increase in the tax charge over the prior year, which explains the reduction in headline earnings.
If we had to just drill into the earnings, that net underwriting result sitting at 471 million, down by 21%. You talk about floods, you also talk about fires impacting that overall net result. Could you just take us through the period and why we've seen a pullback?
Yes, look, we target between 5 and 7% over the next 3 years, 2012 through to 2014. So we're well within our target. The prior period was exceptional, at 8.4% underwriting margin. And the story really was we had increased claims across the board, as you indicated, particularly in the first 2 months of the year in Limpopo and in Mpumalanga with the flooding. We also had, unfortunately, too many fire claims on the commercial side of the business. And so the claims frequencies were up as well in motor, and average claims cost slightly up in motor, driven by exchange rate, unfavorable exchange rate.
Yep.
So we certainly had some claims pressure. The growth was very good for the period.
Sorry, Ian. If we could just take a look at that underwriting margin, which you mentioned, sitting at 6.1% off a high base, 8.4% in the previous period. Of course, we know that Santam has had exceptionally high margins by international standards. But what is your strategy right now with regards to managing margins in a space that is becoming increasingly competitive? You've had more players with non-traditional formats in terms of short-term insurance.
Quite right. As you indicated, in all segments of the market, it's very, very competitive. I mean, our strategy is to grow the business, given our strength and given the scale and given the variety of businesses that we have. So we'll continue to pursue profitable growth, and that shows, that indicates that we need to make margins within the target range. We have actuarial, what we call actuarial pricing, throughout the businesses, the various businesses we operate. So we know the technical rate for the risks that we underwrite, and we try and achieve that as best we can whilst remaining competitive in the space across the various segments. So I think from Santam you can expect more of the same, strong growth relative to the industry, which was very subdued in this 6-month period. For the industry, strong for Santam, but within our target margins.
If we had
That'll be the plan, and we'll manage all aspects: the claims, the growth, and the expenses.
If we had to look ahead at your space in the market, given the fact that we've had the likes of Outsurance really coming to the fore, I mean, just looking at a website called Think Money voting you and Santam in equal position when it comes to short-term insurers. So of course they really have posed somewhat of competition. How is your market evolving in light of this space where you've got really non-traditional formats that consumers are using to access short-term insurance?
You're quite correct. Santam's traditionally been an intermediated player. We source all of our business, or certainly used to, from intermediaries. We remain in the Santam core business, an intermediated player, but obviously we've had to react to the needs of consumers, which, as you've indicated correctly, are certainly more broad-based. So we have a direct offering through the MyWay business, as well as a range of intermediated offerings to the market through the Santam business. So it is very competitive. Outsurance, as you've indicated, have made strong inroads. Telesure also. But MyWay have had a very good 6 months. We're pleased with the direct offering that we've got. And we think that the intermediated market will continue to dominate in overall terms, and certainly in the commercial market for the next few years. There's certainly some pressure. Consumer interests are are driving their choice of distribution channel. And as you've indicated at the outset, you said it's all about service and using the new technologies. So we're quite pleasing that we got highly rated there as well, along with one of the direct players.
Yeah, when it comes to the African space right now, of course, being majority owned by Santam, who has made some inroads into Africa, which specific market right now are you going to look at growing your presence in? And is it going to be organic or acquisitive growth?
Well, as you've indicated, we will, as a subsidiary, a major subsidiary of the Santam Group, we will work off the footprint that they are establishing in Africa, in India and in Southeast Asia. That creates a number of access points for our specialist businesses in particular and for our reinsurance business. So I think the outcome that we're likely to see is where Santam makes the primary equity investments and we leverage off those investments as the sort of technical partner to the Santam Group, and also creates business opportunities directly into the Santam business. So I think it'll be a coordinated effort. It'll continue to be a coordinated effort as we progress. We don't see major acquisitions. I think even from a Santam perspective, it will be a gradual process and it'll make a difference to our diversification outside of South Africa, but only over the medium to longer term.
When it comes to the microinsurance space in South Africa, you've indicated you could potentially be looking to apply for a license. Is that still the case?
Yes, I mean, microinsurance is the exact regulatory environment for microinsurance has still to be finalized, and it'll roll out probably only over the next 2 years. But I think the message that I want to try and get across is that we are a broad-based player in Santam. We play in all the segments. If there's regulatory advantage in terms of lower cost and lower regulatory controls in the bottom end of the market, in personal lines, by way of a microinsurance license, that's something that we would obviously look to as well. We wouldn't wish to allow regulatory arbitrage in some of the target markets that we've identified.
Ian, thank you very much for joining us today. Santam CEO Ian Kirk.